A surprise interest rate hike in Mexico. As Latin America's second largest economy slows, the central bank there is stepping in to keep things going. The oil-rich nation is struggling under the weight of collapsing crude prices, and the government hopes a multi-pronged approach to propping up the economy will keep it from falling any further. CCTV's Franc Contreras has this report.
Collapsing world oil prices are the main cause of Mexico's economic slowdown. And that's seen the Mexican peso decline sharply against the US dollar, hitting an all-time low in early February. To prevent further declines, Mexico's finance minister announced $7 billion in cuts from the federal budget, and Mexico's central bank raised its benchmark lending rate by 50 basis points to 3.75%.
Volatility in international financial markets has increased, and the external environment facing the Mexican economy has continued to deteriorate.
These adjustments by the Mexican government are largely seen as an effort to make the peso more attractive to foreign investors. But here on the streets of the Mexican capital, many people we spoke with say they're already feeling the pinch.
Real estate agent Diana Alva says the downturn is especially evident in rising transportation costs and a weakening job market.
In many companies, especially government contractors, we see that unemployment is growing. It's plain to see.
But there's also...
Independent economist Jonathan Heath says the government's measures might actually slow the Mexican economy a bit more, but he says they are designed to maintain consumers' purchasing power.
The job market might be slightly tighter than maybe it would have been if the measures hadn't been taken. But, I mean, I don't think it's going to be like a major impact. I still think the economy is going to grow above 2%, slightly more. So, I mean, if you consider what's happening like in the rest of the world, actually it's really not that bad.
Heath says Mexico's central bank and finance minister have learned from past mistakes. They now know that stabilizing the country's macroeconomy is the best way to shield Mexicans from global economic volatility. Franc Contreras, CCTV, Mexico City.